So we did around 140% higher sale. Last year, same quarter, we did 23 crore. This year, we did 57 crore. In terms of operating profit, the EBITDA numbers, we did 4.9 crores last year, and this year, same quarter, we did 13.3 crore, which was around 170% higher. And the profit before tax last year was negligible. This year, we did around 7 crores, thereby 880% growth. But as I said, these percentages are because of a low base factor. Individually, in terms of margins, this year we did around 23% as EBITDA margin, around 12% as profit before tax, and gross margin around 66. So eventually, if you compare the last year, same quarter, there is a growth in terms of profitability, and that is how it is being reflected in the numbers which have already been shared with you. This is, that's it. That was a different slide. So eventually we have tried to cover very briefly and very quickly the numbers, which in any case are already available with you. The idea of such calls is to have a two-way communication rather than a one-way. So that is why we keep our presentation crisp and short. And now I think we have some pre-registered questions. We will first go through them, and then we can have an open forum to ask or answer your questions. I can already see a lot of raised hands, but we will first start with the question from
which are
registered first, yes. So I think we have not many questions this time, but we will try and I think we can take Mr. Bharat Mukhi first.
Manglaji, please unmute Mr. Bharat Mukhi.
Hi, Bharat. Hello.
Are you speaking? We can't hear you.
Hello. Manglaji, have you unmuted? Mr.
Hello.
Bharat? Yeah.
Hello, can you hear me, sir?
Yeah.
Okay. Firstly, congratulations, team, on a great set of numbers. My question was on a recent conference call with a set of investors. You mentioned that your competitors are mainly based out of Taiwan and I believe you said Vietnam and China.
Yeah.
Now, do we foresee any challenges in terms of margins or in terms of competition in the near future from these players?
First of all, I'll say competition is always an opportunity. Competition is never a threat, and competition is never a challenge. Competition always keeps you on your toes. So when we say Taiwan, Japan, China, or any other countries, my purpose of saying was actually that we have to compete against global players. So then in terms of technology, in terms of deliverables, in terms of cost, we have to be matching the global players. So margins, it's not that this global players will never work on a lesser margins. So that way we will also not work on lesser margins. Rather, we have to upgrade ourselves continuously to be ahead of the competition. So that way it's not a challenge, it's not a threat. It is an opportunity, and it is always keeping our management or our team leaders or our members down the line to be at par with the global customers. So it's not any such serious threat to us. It's rather a good opportunity that we are competing against best in class.
Okay. Great to hear that, sir. On your debt to equity, sir, do we intend to keep it at current levels, or do you see that going up in the near future, or maybe it stays flat?
First of all, our debt equity ratios are very, very healthy. I think we are still less than the industry norms. We are only one. Industry norms are even banking says that 1.5 should be debt equity ratio. And after 1.5, people start feeling in a yellow thing. We are still hovering around 1. So our debt equity ratio is fairly, very, very healthy. And as I've told time and again, we are a kind of industry who is always capital intensive, who is a kind of technology product. So obviously to produce a technology product, you need a matching technology for manufacturing. So that way we are first of all at a very, very healthy level and we keep maintaining the same trends.
Okay. Yeah. Thanks a lot, sir.
Yes. Oh, thank you, Bharat.
I
Next,
think
next question is there, yeah, Mr. Ankush Agarwal.
do we have Mr. Yes? No, that's Ayush Agarwal. Do we have Mr. Ankush Agarwal?
Yes. Yes.
Oh, yes. Okay.
Yeah. Hi, Mr. Singh. Am I audible?
Yes, yes.
Yeah. Okay. So, Mr. Singh, continuing on what last participant left off, like you've always mentioned that our business is slight capital intensive and we see our working capital requirements are slightly higher. And going forward, since our export business continue to grow, the working capital requirements will slightly inch higher. So, my question was that, do you think that as a business, as a company, RACL has reached a stage wherein the future growth can be funded internally, right, without taking a lot of debt or facing equity? Like in the past, whenever we did CapEx, we had to raise quite a number of debt, and we had to also go and raise equity because the debt wasn't available, like from the banks and all that. Right. So, do you think we have reached that scale, like when the internal cash itself would be able to fund our growth without using a lot of debt?
I'll answer you. First of all, the entire capital expenditure is never out of the borrowings. 20 to 25% we always pay from our internal accruals. We normally borrow from the banks around 70-75% of the capex. So that is first of all, the rest is being given by our internal accruals. And secondly, for capital type of expenditures, normally we make borrowings for when we procure all high-end equipment or new technologies and that. So that borrowing will continue with the same trends. As we say that, first of all, borrowing is not a bad word, it is a good word, because if we borrow, it means we have the capital to earn also. So borrowing should be spent on a very, very judicious requirements. Companies fall into that trap when they borrow and they spend not unjudiciously. So investments are not intelligent, or the expenditure is not intelligent, or normally companies do first they will invest and then they will start hunting for the customers. RACL doesn't do this. RACL will first get the customer, then will invest, so that our investments are never idle. Although there is a little bit of gestation period always is there, but as I said, borrowing is not a bad word. Banks will really cry if everybody stops borrowing. Only thing is, after borrowing, you should be very, very judicious in spending so that it should increase your revenues. If you really see our financial numbers, our finance cost is always reducing year on year, despite of the fact that we are borrowing. But finance cost in terms of percentage is always reducing. You see the data of past 5 years. So it means we are borrowing judiciously. It means whatever we are borrowing, we are investing it in a productive equipment or productive usage. And secondly, we are having healthy numbers, so we are able to get very better interest rates or better service from the banks. So borrowing is not the alarm. Alarm is if your finance expenses are increasing, our finance expenses are reducing. So that again shows a very, very healthy situation.
Right. My question was not specifically that okay, obviously borrowings are needed in order to grow. My only question was that incrementally it won't put more pressure on the P&L, right?
Yeah, it will not, because P&L pressure will only finance cost, and finance cost is reducing. So P&L pressure will not be there. P&L rather is getting more healthier because on P&L pressure is the finance cost because borrowing is not reflected in the P&L. What is loaded into the P&L is your finance cost. And if finance cost is reducing, it means our P&L is not under pressure. Rather, P&L is improving because of borrowing. Because we borrow, we increase the top line. We increase the top line, we increase our PBT and EBITDA margins. And finance cost is the percentage is going down. So our profitability is improving.
Right. And that is what was Bhushan. You explained it very well. And so, what kind of asset turn do you expect to get on your incremental capex? Any broad number?
Sorry, your voice was cracking. I could not hear.
What kind of asset turn? Yeah. What kind of asset turn do you expect from your incremental capex? A broad number would do.
What kind of what?
Your voice is not.
Asset.
What kind of asset?
Asset turnover? No.
Asset. Yeah, asset turn.
Asset turnover. As of now, our asset turnover is around 1.4. Ideally, it should be more than 2. But eventually, as you know, a lot of investments, what we have done in the past have been for the projects which yet have not started. For example, the new plant we have built in and the other things we have formed. So once those revenues start kicking in, you will see this improving. And this is one topic also we always brainstorm that what should be the ideal asset turnover. But I think minimum 2 should be there. Anything bigger than that is always good.
Okay. Okay. So 2 is your expectation.
Minimum.
Yeah, our benchmark is 2.
2. Okay. So if you want to achieve a guidance of 500 crores in by FY25, you won't be needing a lot of incremental capex. Right? We are already at around 215 kind of gross block.
Obviously, there are repayments also which happen. So net addition to debt should not be higher, but eventually.
No, I'm talking about gross block. Gross block.
Actually, you have written gross block of 215 crores. I think you took some old numbers. Our gross block is 175 crores. And out of 175 crores, actually around 27 crores is land and building. So actual active equipment is only 140 crores.
But eventually, to answer your first part of question regarding the internal RACL, if we can finance our equipment to that. So eventually, what is more important is how is my operating cash doing? So if you see my cash rate from last 3-4 years, it's been improving every year, 40-45%. My cash generated from operations. If you see my 4 years old balance sheet versus now, you will see that eventually my operating margins are improving. So that helps me if I add depreciation back, a good number coming in. And so that way it's a comfortable position. And in any case, sir told eventually our interest cost, if you see the last year numbers, that annual report is now on the website. So we've drastically reduced from, I think, 10.5% to 6.9%. So eventually our team always works towards improving these interest costs. And so that way, I think we do keep a check on that.
Okay, got it. That was very helpful, sir. Thank you for answering the question.
Yeah,
Good.
Thank you.
Can we have Mr. Varun Arora to be unmuted, please, if he is on the call.
Mr. Narendra Arora.
No, Varun Arora.
Varun Arora.
Yes.
Yeah. Can you hear me?
Yes.
Yes, Varun.
Yeah. Hi, sir. Thanks for the opportunity. Sir, my question is related to the fungibility of the capex that we do for ICE customers and EV customers. Now, in the past, you've mentioned, sir, that the gears that would be needed for EV, they look similar to that for for an ICE customer, but the precision requirements are more in case of EV. So I wanted to understand the capacities that we have deployed so far for ICE customer. Are they fungible and can be used for EV customer as well?
Yeah, I will answer you. All our new investments are happening on high precision product and high precision machines. So obviously those equipment which we are putting now is adaptable to EV customers also. And one more thing, as you see our product portfolio, We are not only supplying to cars or two-wheelers, we are supplying to tractor manufacturers and commercial vehicle manufacturers also, and recreational vehicle also. Their EV issue is not that stringent. So eventually our capacities are being sufficiently loaded for all such customers. EV has more initial thrust will be on slow-end two-wheelers or urban mobility, cars or public transport, buses or taxis or so on. So eventually low-end cars, buses and two-wheelers of smaller size will be first to enter where EV has to enter. Incidentally, we are not much present in low-end cars. We are not much present in low-end bikes. We are into premium bikes, which are 1 liter and 1.5 liter. So our utility of our capital equipment will be for fairly for next 10, 15 years. We are comfortable. All our new investment which we are doing in a very, very judicious way that all those equipments should be adaptable to EV also. So this is how we have created a product mix. I hope I'm able to clarify your query.
Sir, it partly does. Just a clarification. So, like, we've got one big EV customer that will be, will start supplying this year. So,
Yeah.
I mean, the capacity that we would have put for that customer, can it be used for an ICE customer as well?
Oh yes, sir. They are fully flexible capacity. Yes, yes.
That answers my question.
Yeah, that's very clear.
Yeah. So the second question is, we've seen a phenomenal growth in the downturn and even prior to that, and we've been basically, increasing our capital expenditures to capture this growth. But if I look at it, our free cash flow, in last few years has been on the weaker side, even though our margins have been fantastic, ROC is good, but our free cash flow is still on the weaker side because probably we've been basically investing heavily to fund this growth capex. Any thoughts, sir, you can share as to how you are looking at, free cash flow? I guess, the capex has been eating away the operating cash flow and working capital has been on the higher side. So how should one look at the free cash flow?
I will slightly disagree with you. To be very honest, for a manufacturing organization, free cash flow, why one should keep free cash flow? Cash should always be deployed for productive use. Either you deploy it in your capex or you deploy it to reduce your creditors to get a better negotiation margins. Keeping money in banks is not the healthy scenario for at least for manufacturing organization. For real estate and for others, it may hold good. But to be very honest, free cash flow that way is not that typical or that critical and kind of analysis criteria for a manufacturing organization. For us, better is that we should have a sufficient free cash available with us to take care of our contingencies or any short-term needs. But otherwise, the cashes should be deployed in a productive use. Whether you invest into the capex or you reduce your creditors like this. So this is, it's my thought process. It may be gelling with but as a investment analyst, you think, or as a finance professional, you think. But I personally feel we as a business person should always deploy money in actual business usage. Keeping money as a reserve or not being deployed and cash in hand or free cash. They are actually, if you see, they are, to be very honest, they are non-productive money. If it is invested in and you are making good use of it, it is a productive money. This is how I think it.
Right. No, sir, the context of the question was that, we've been in a, we're still an early stage, company. And so we were putting capex, which was completely understandable. The question, which is why I asked the question on fungibility also, that going forward, uh, will the capex intensity kind of slow down to get the same kind of growth? Because we'll be able to switch our capacities, across customers and, across the different set of opportunity set that we are serving.
That is a very, very intelligent question which you have asked. At some stage, need to invest keeps on reducing when your size keeps growing. Because whenever we invest on a particular technology or equipment, it's not always 100% balanced. Eventually, you keep on generating some spare capacities. So eventually, you keep on growing, your need to invest on capex will keep on reduced. So in terms of percentage, like we said that asset to turnover, as on today, say 1.4, it may go to 1.5, 1.7, 2, and at some stage it may go up also. So when you grow in size, eventually this need to invest in terms of percentage figures will go down. In terms of absolute figures, it will still be higher, but in terms of percentage, yes, it will go down.
Sure, sir. Thank you so much, sir. I'll get back.
Yeah. Thank you, Mr. Varun.
Now,
Is Mr. Rudresh Kalyani.
you go.
Mr.
Mr. Rudresh Kalyani.
Don't understand. Mr. Naveen.
Mr. Rudresh Kalyani. He is visible on the screen after Mr. Tariq Hussain. Yeah. Yes.
Hello.
Hello, Rudresh. Good morning. Good afternoon.
Good afternoon, sir. Thanks for allowing me to ask the questions. I have got a couple of questions. The government is coming up with this bumper to bumper insurance plan and to make it compulsion. How is this going to affect us?
Sorry, which plan?
Bumper to bumper insurance plan for 5 years for the passenger vehicles. It's in the draft, I think. So how is that draft is going to affect us?
No, the draft government has not shared with us, but if you can let us know what exactly is this.
No, there's some insurances. Actually, government is insisting there should be comprehensive kind of insurance. That's not
But that eventually.
But eventually it will not affect too much of the component makers. Whatever effect it will have on the vehicle manufacturers. Actually, what is asking, nobody is actually now thinking that so far like third party insurance is mandatory. Now there should be some threshold that this insurance also. But it is at first of all a too early stage of discussion, and secondly, if little bit impact it may have only on the vehicle makers. I don't feel that on component industry will have any such direct impact.
Okay. And my second question is on the chip shortage which the industry is facing. So
We are actually making mechanical components, so we are not affected by this thing.
Pardon?
Since we are making mechanical components, so we are not, our inputs are not chips. And our vehicle manufacturers, yes, off and on, they have some issues. But incidentally, our customers are very, very big brands. So their logistic management and their forecast systems are very, very robust and very strong. So it has some impact, but it's very, very temporary. I think we are not affected at all, I'll say.
Okay. And my final question is regarding, we have niche market. To get the revenue, do we have any plans to go into mass market as well?
If mass customers give us opportunity, why not? But to be very honest, every manufacturer has his own product placement, every manufacturer has product strategies. So, but everybody is open for diversification. So when such opportunities comes, we will not say no. Definitely, we will love to enter into that market also and that business also, provided it gives us revenues and it gives a long-term business sustenance. Why not?
Okay. That's it from my side. Thank you.
Thank you, Chris.
Can we have Mr. Tariq Hussain to be unmuted? Tariq Hussain,
Mr. Tari?
Hussain.
Am I audible?
Yes.
Yes.
Okay,
Hello.
thank you. And yes, first of all, I want to say congratulations on your corporate governance. I saw the recent upload of that you did with a private investor. You guys kind of uploaded the entire conversation of yours, and I think you're the only company that has followed that SEBI guideline so early, and you're setting an example in corporate governance for the entire Indian public listed market. My question is around like you kind of supply to luxury vehicles and niche vehicles and luxury premium bikes. A couple of industry leaders like Tesla and other luxury players are looking to enter Indian markets. So, do you have any aspirations to kind of start supplying to them in line with what you do for other European and players?
As I already told a couple of minutes back, we are always hungry for new customers, always hungry for new businesses. So you particularly named a particular brand, Tesla. So why not? But my only thing is when I'm working with BMW and KTM, and also we are already working with bigger brands. So for us, brand, there's no attraction for the brand. There is attraction for a good business case and good business volume. So we'll definitely be very, very keen to work with any such potential customers. Yeah.
Okay, thank you. That's all from me, and congrats on the great set of numbers.
Thank you, Tarek. Thanks for your compliments on this corporate governance, and we'll continue to maintain such kind of transparent way of working.
Can we have Mr. Nikhil Chaudhary to be unmuted?
Mr. Nikhil Chaudhary को unmute करेंगे?
Mangla ji?
Yeah, am I audible?
Yes.
Yes.
Yeah.
Yeah, sir, thank you for the opportunity and congratulations on a great set of numbers. I had just two questions, sir. We had given some samples to our customers for testing, like we alluded in the last call. I just wanted to know how's been the response till now, and probably the semiconductor shortage issues which you already answered. That was my follow-on question. So the first one was the samples that we had given to the customers. Any feedback?
It's a routine process. So
No, we keep giving many samples, but I mean, eventually, I don't know the context of question, but
So, sir, I am alluding to the capex that we have recently done,
Yes.
as in the December one from the new facility, we had given some samples.
yes. So that in any case, for new customer, which we've already briefed. In any case, the commercial supplies we've already told you will not start before end of this year. So that is how the plan is as of now.
Now, but also, samples are very much in advanced stage. Validation is almost at the completing, and as Prabhat told that by end of this year or early next year, the mass production has to start. So the validation process is in very advanced stage and is with a positive results. Yeah.
Great, sir. And sir, second thing, a bit different, like wanted to understand what is our arrangement with clients in case of recall, like also what has been our error rate, if you can quantify, like some issues with our products.
Touch wood, there has been no recall ever, and eventually there are recall guidelines in the contracts. So if there are any recalls which come in the future, there are provisions. Eventually, we always keep a hedge by ensuring those risks.
Insurance policies, yeah.
So those policies are in place, and so recall is if anything happens in the field, but eventually the plant where these assemblies happen also have a quality rating wherein what has been detected as rejection in their plant. So I cannot name any customer specific, but one of the customer has given us a ppm of to have 100 ppm. It means they allow 100 in 1 million to go bad. From last 8 years, we have been maintaining under 25. So eventually, that is how our quality systems are and products are. And, yeah,
Got it, sir. Thank you so much. Yeah.
Recall is a very, very dirty and treacherous and dangerous word. We have not even any field failures also for all our export business. So
Okay, all right, sir.
thankfully, with grace of God, we have not received even any warranty claims or any field failures. Leave aside in a big way, even in a minor way. Some stray things might have happened a couple of years, 5 years, 7 years, 10 years back, but nothing in that. And a recall is, yes, it's plain and simple zero.
Great to know that, sir. Also, sir, last thing, I also wanted to appreciate the fact of the earlier participant. Similar was my thoughts also on the corporate governance. Thank you, sir. That's it from my side, and all the best.
Thank you.
Mr. Pratik Kothari from Unique
Yeah.
Portfolio Manager. Mr. Pratik Kothari. Manglaji?
Hi, good evening, sir. I trust I'm audible.
Yes.
Hi, Mr. Kothari. Good afternoon.
Hi, good afternoon, sir. So again, my sincere appreciation to you and your team for the transparency practices that we are following at the company. So my first question, given the kind of customers, end customers that you're working with, they are massive in size, and as of date, our average top 5 customers will be contributing about maybe $357 million, and that would be a very small share of what those guys will be purchasing. And even our target 3-4 years out, it's multiple of where we are today, but it still would be a very small part of what those customers would be purchasing. And given the technical capability, etc., that we speak about, just wanted your thoughts on how do we think about scaling this up, or is this anyways constrained by our risk governance in any sense, where we want to get customer first and only then we want to put up a new facility like that? So just from that perspective, we can speak a bit.
I will answer you. First of all, our core competence is gear manufacturing, and the size of organization we are as of today, we really want to stick to our core competence or allied products, means which are very near to our core competencies, because when we are producing gear, so some precision parts or brake parts or suspension parts, because which require critical machining. So we really want to remain close to our core competence area. And incidentally, this area is where it is capital intensive, and we have to really go in a very, very systemic way. We want to grow. Obviously, everybody aspires to grow, and we are growing over 20-25% year on year. So it is a healthy growth trend. But if today's world is not very, very consistent world. There is a concept of VUCA. It is volatile, it is uncertain, it is complex, and there is ambiguity. When this coronavirus will come, when it will go, nobody knows. So eventually, one has to always keep growing, but with a safer course. So that is our core strategy. After a few years, when 5-7 years back, we were a small boat. Today, we are at least a small size ship. Maybe after a few years, we'll be a big size ship. Then we have bigger appetite to take larger jolts. No business is risk-free. No business is fluctuation-free. Only thing is your capability to withstand the jolts has to be there. And whether it's an engineer or a chartered accountant, they always say you should have a 1.33 ratio. DSCR should be 1.33. You as an engineer who is a CPCPK has to be 1.33. Process has to be capable. You are having 100 microns of tolerance, you should make within 60 microns. It means you have some room for withstanding the jolts. So if we really today are 250 crores, we say, oh no, we should be 5,000 crores company or 1,000 crore company. Then it means if 10% of that fluctuates, it is 100 crores. So my company of 250 crores, will it be able to withstand a jolt of 200 crores? I will say no. So only say first we have to scale up to a sizable level. Then our capacity to withstand these jerks and shocks will grow. So eventually at some stage we'll grow, but we'll grow in a very, very planned and systemic way. At least as we are told, by year 2025, we have planned to go a 500 crores company. But if you see our past record, in year 2010, we were a 100 crore company. From 100 crore company to a 250 crore company, we're taking almost 10, 12 years. But from 250 crores company to becoming a 500 crores company, we have put a target of only 4 years. So maybe from 500 to 1000, we may come, okay, we'll not 4 years, we'll say only 3 years, something like that. But you know, our success story was only because of this, that we have grown in a consistent way and we have grown in a stable way, because if there were aftershocks, we were able to bear. Now imagine somebody out of today's conference said that even in the downturns, company had a growth. So this was really our resilience or our patience happened in past years, that despite of the situation, then there was a corona, there was a challenge, we grew. Reason, we had very, very inherent strengths to withstand those jolts. Company was lying shut down for 1.5 months in 2019, between 1st April or 25th March till I think 15th May or so. But we were the only company who paid 100% on time to the people, who paid 100% to the suppliers, because we had inherent strength. And then we had the sense raw materials with us, we had the manpower with us. So then when the opportunity came, we were the first to grab the opportunity and we grew. So this is how, because you know, sometimes rush to overgrow takes the companies backward. So this is a strategy which we have done. We will do in a systemic way and in a which is in line with our previous growth patterns. Because like you have seen for past 4 or 5 years, we are growing in a big way. But only thing is 20% of 50 crores is only 10 crores. 20% of 100 crores is 20 crores. And 20% of 250 crores is 50 crores. So this is how, in terms of percentage, we may be growing same or little lesser, but in terms of absolute, it will be growing much, much faster. So this is our growth journey and we will maintain like this.
No, absolutely, sir. Our performance over the last 2 years when industry saw such a massive downturn, it's pretty commendable. So my second question, we have done some, and maybe largely to achieve our FY25 targets, we have done some accelerated capex, which we have not seen so much in our history. I mean, we spent 50 crores last year, we'll be spending another 50 odd crores this year. So if you can just throw some light about where is this capex being focused towards? Is it just to increase the capacity of our existing products, or is it something more?
It is threefold. It is first of all to creating capacity for existing product, creating capacities for new customers, and modernization and upgradation of your existing plant and machinery. You know, let's not forget, we are a 30-year-old organization. So we have to continuously modernize and upgrade our existing equipment also. We have to take care of the obsolescence also. You know, if we carry the dead machines with us, so we keep on spending extra on maintenance and all those things, and then we are not rated as a high technology company. So our investments are on 3 fronts, as I explained.
Fair enough, sir. And my last question on the part, sir, in earlier calls, we had mentioned that as the gears shift from IC engine to EVs, the precision, etc., goes up substantially, and hence the value of each gear is much, much higher. But also, I believe the number of gears reduces substantially between an IC and electric vehicle. So net, what would that effect be?
We should produce less and earn more here. So what is the harm into this? So if a expensive gear is, if IC engine gear I am selling at 100 rupees, and if I EV gear I am selling at 500 rupees, and I sell 40% of the number, so what is the harm? It is always better.
Fair enough. Fine.
Yeah,
sure. Yeah. Great. Sure. So thank you and all the best.
Thank you, dear. Thank you.
Can we have Mr. Ashish Sood to be unmuted since he has asked on the chat?
Manglaji, Mr. Ashish Sood.
Am I audible?
You are.
You have to be a little louder, Mr. Sood.
Now it's clear.
Yeah, we will manage.
Little more, yeah, okay.
Thanks for the opportunity.
Yeah,
So
nice.
my first question is that what is your capacity in terms of number of gears so that the company can produce, and what's the blended realization price?
Oh, price-wise, we don't disclose those details, but in terms of capacity, we do not make only gears. We make gears, we make shafts, we make many more items. So that question is abstract, but to give you a number, we do around 5 to 7 million parts a year, and eventually the mix is containing gears, shafts, and other things.
And so you have given a target of 500 crore sales. So if you could give us a breakup that how majority of this sales will come from two-wheelers, four-wheelers, or tractor segment. So if you can give it the breakup that how this
That
additional
again,
delta
I
will
mean, obviously that's a competitive edge. We would not want to disclose those numbers, but that 500 crore is a very firm plan based on certain data. And eventually in next 3-4 years, nothing drastically will change on the customer profile. Eventually, whatever we are selling, that business will grow and some new projects will come in for which we have already indicated which application will it be. So the pie will remain hedged, mixed between those categories only.
Okay, sure, thanks. And you can share the wallet share from your top clients, BMW, KTM, Kubota?
No, that again is a company specific number.
Okay, and last question from my side. What is your content per vehicle in two-wheeler, four-wheeler, and tractor? If you could share the same.
Depends on the vehicle. So eventually we are supplying to a 1200cc bike also and 100cc bike also. So eventually that will depend again on the category in which the product is going.
So as a percentage of vehicle cost, for example, in two-wheeler, so as a percentage of vehicle cost, so what is that percentage? You could share that?
Very less.
Actually, as Pravas told, it normally becomes, when we say gears, if we supply the complete platform, means each and every gear goes to a bike, then the percentage is different. But if we are supplying a particular drive line, because when we say vehicle doesn't have only a single commodity as a gear. There are engine gears, there are starter gears, there are transmission gears, there are the rear wheel drive gears. And some platforms, we are there in all the requirements, right from the drive line up to the axle line. So it depends from model to model, vehicle to vehicle.
Volume also.
Yeah, and volume but like to answer your question, a very, very crisp idea, there is a complete gear if goes into a vehicle, it is almost I will say 5 to 7% of the vehicle cost is only into the gears.
Okay,
or maybe 10% also. So it depends on which vehicle. Model to model, which vehicle platform. But it's actually, gears is a very, very vast commodity. So you can't really do a very general kind of statement.
Right. So, sir, can you tell us how many gears are required in two-wheeler and cars, especially?
In any case, if you need information on how a bike is made, how many gears, eventually there is YouTube and Google. But eventually, for the sake of other people to ask questions, I would say thank you because you already asked a few questions. But if there's anything which is still unanswered, you can obviously email to us.
Sure, sure. Thank you.
Thank you. And we still have 10 minutes, so we can see these hands.
If any question, if any person is
Sahil Sharma.
Some green ones.
Yeah, can we have Sahil Sharma to be unmuted?
Hi, sir. Can you hear me?
Yes.
Yeah. Hi, Sahil. Good afternoon.
Hi, sir. Yeah, thank you so much for the opportunity and congrats on very good numbers. Just to quickly, follow up on that question about Tesla, and it's not about one client, but like what we are trying to understand is how easy, difficult is it for us to penetrate the supply chain of new brands, basically, or like how does it work? Do we have to go and talk to them? Do they come to us? Is it a mixture of both? Trying to understand like how easy is it for us to break into new clients, basically. Yeah.
It is a very complex process. So, are you from the business management or are you from the finance management?
Sir, neither, sir. I am actually a computer engineer.
Okay.
Then there is no specific code we can put in and we can business directly from them. But eventually getting any business, irrespective it is Tesla or even a small company, getting a business is tough because there are gestation periods, there are hesitations, country-specific hesitations. Many of the new projects we have come in, customers have never bought anything from India, and then there is this geographical border they have that, oh, can Indian suppliers do that? So there is a lot of those things when we talk about bigger brands, because quality is vanilla, everybody has. Because if you say I'm a quality supplier, that is like given. You know, we are talking to them only because you have quality. So that is a prerequisite. But other than that, eventually they want to understand what is the company's strategy towards being sole independent, because the biggest worry for any customer is the supplier stable enough or financially good enough to sustain to the next entire project life, because once a supplier enters, then it doesn't exit 10-15 years of that vehicle life. So those things are very important for them to understand country specific risks, inflation which might happen to the country area, and then eventually the size of the team, strength of the team. So there are many things. Eventually it's not that easy. You write an email and the RFQ comes in. The word of mouth always flows. So many of the customers we have today, we have come because of, let's say the buyer changes, the company is today in X, he moves to Y, and he says, okay, if you can give to here, why can't you do there? So that also helps. And eventually we have created a name in the industry. So at least for two-wheelers, I think all big brands have our parts, BMW, KTM, Kawasaki, or Aprilia, or Piaggio. So all two-wheelers, wherever they are going, and this customer China, CF Moto. So eventually they all are working with us only because we have proved ourselves somewhere or the other. So, but to answer you specifically, Tesla is a hard nut to crack, and obviously, but we're not that much passionate about just following for the name, as I've said. Eventually, it also for us should be a business case. There should be good volumes, good revenues projected for next 10 years, and eventually we are working parallelly with many other companies who are coming into EV side. So yeah, that's how it is.
Yeah, so essentially the background is, I think we are the largest one in the four-wheeler market, like globally. So obviously, like I totally understand it's very difficult. So all the best for like all your client additions.
Yes, thank you.
To add what Prabha said, internet has made life of the manufacturers equally easy and equally difficult. First of all, now all the customers know which supplier is doing what. Internet is every information available on public domain. But unfortunate part is what competitor is doing, manufacturer also, customer knows that also. So life has become equally easy and equally tough. One side we are, customer knows what we are, but he equally knows what our competitors are. So we have to always, these days, hunting the customer or searching the customer or supplier is not that difficult. Most difficult is customer comes at your doorsteps only on three things. As Prabha said, first of all, he no more looks only at the cost. He looks no more looks at the quality. He sees what you are sustainable in the financial strength. These days, European and American customers, particularly European customers, are very, very particular about how environment friendly we are, how we are taking care of our employees, how is our general awareness about the laws of the land, so that they really see they want to work with a company who is a professionally managed company, who is actually taking care of environmental laws, who are really taking care of the non-conventional energy sources and this, that. So these customers are demanding too much. Okay, so hunting the customer is not an issue. Only thing is you should be fully ready so that customer is able to adopt yourself. So this is how, once you are ready, customer will come to your door. So you need not to go to the customer. This is what we feel. Okay, whatever he wants, you create, and then getting customer is not an issue.
Yes. So
Okay, I think
time is over, or
maybe you can ask any last question from free if anybody is asking.
yeah, there is no.
Yeah, so maybe we can ask the last question to Ayush. Yes, Mr. Ayush.
Manglaji, please unmute Mr. Ayush Mittal.
Hello.
Yeah, good afternoon, sir.
Hi, Mr. Ayush. How are you?
All good, sir. It's always a pleasure to hear you and your team. Thanks for arranging this.
In fact, it's all thanks to you people. Yeah, you increase our morale because we get so many compliments and we always around those who have to work further hard. So that way it is a big thanks to all of you also.
Sir, I have a couple of questions. First, I was looking at the annual report and I noticed that there's a advanced for machine for procurement of machine. It was around 9 odd crore. So, are we doing further capex in this current year, or can you share more what kind of spends?
Because that previous years, the whatever capex we have planned, it was out of that only, but the lead times of machines, these are 6 to 8 months. So many times we have paid the advances previous year, the equipment are coming this year, but this is out of those capex only.
But sir, if it is an advanced, then there has to be further addition of machine in the coming year. Then
it is coming in this year because financial report was of last year. So imagine if I have given any advance in month of January or February, now machine will come in October or November. So obviously that much amount will be reflected as an advance in the books of.
Yes. So as it is an advance of 7-8 crores, so I was trying to understand if the capex is of a higher amount that will accrue this year. The machine addition of higher amount will get added this year.
So we already put about 50 crores of capex this year.
Okay.
So because normal industry norm is 20 to 30% advance payments to the machine supplier, so that way it synchronizes with that. Whatever 50 crores capex we have planned this year, so eventually we ordered most of the equipment last year because these days machine tool availability of machine tool also is a big issue. So they are long later.
So how much of addition will happen this year in FY22?
We have already planned it's 50 crores. Capex.
Another 50 crore.
50 was last year, 50 is this year.
Okay. Yeah, that's what I'm trying to understand. So this year also you are going to do another 50 crore capex.
For this year, yes.
Okay.
Yeah.
And again, this is backed on the new customer wins and the further business that we are seeing from the clients.
Yes, exactly. As new businesses from existing customers and one new customer also we have added.
Okay, and that's great. Yeah. And so some update though you have mentioned that the volume of takes will start by the end of this year or early next year. Can you also share some kind of budgets or numbers or growth that we are looking for this year, given that we are already halfway past this year?
To be very honest, that before we put any budget for public domain, first of all, it has to be approved by the board of directors. But normally as a practice, what we do, any financial year's budgeting we do normally last quarter of the current year. Like if I have to prepare budget for FY 22-23, we have to get the budget approved in our board of directors maybe in Q4 of this year. But some advanced planning we keep doing because we have to prepare the budget. So obviously our marketing and business development team is already preparing that what kind of order book future for next year all has to be done. But formally we will be able to give you these numbers of next year once we get it actually approved by our board of directors.
Okay.
Those trends we've already shared, they will be in line with what we have shared because if I have to be 500 crores by year 25, so I have to grow every year. I can't have all the asking rate in the last year.
Agreed.
In line with our growth trends.
Got it. Okay, sir. Thank you and wish you all the very best. Thank you.
Thank you. I think with this we can disperse. Thank you,
Thank
gentlemen.
you. Thank you, ladies and gentlemen, and we will call it a day. We hope we were able to resolve as many queries as possible. If you have any queries left unanswered, please send in your queries through our email ID, which is investor@raclgeartech.com, and we'll try to reply to the queries as much as possible. And on behalf of RACL Geartech, we conclude this conference call for today. Thank you so much.
Thank you, gentlemen. Wish you all the best. Please take care of your health in these tough times.